Welcome back. Now, amid the uncertain geopolitical landscape and high gold price environment, total demand for the yellow metal increased by 3% year-on-year in the second quarter, while total gold supply rose by the same margin, with mine production at a new second quarter record. John Reade, Chief Market Strategist at the World Gold Council, joins us with more insight into the demand trends during the period. John, thanks so much for your time this afternoon. So gold still proving to be the safe haven of choice in uncertain times. Talk to me about the biggest factor that influenced demand.
Well, thank you. The biggest factor by far was the 78% increase year-on-year in investment demand that we saw in the second quarter, and that's really been the story of the past couple of years.
Yeah.
Strong investment demand for gold, along with central banks also driving the price higher and squeezing out jewelry demand as gold gets more pricey.
Mm-hmm. And talk to me about demand for ETF investment. Does this just speak to, I guess, a mainly risk-off environment?
Yes, I think it does, and I think the geography of the ETF demand in the second quarter is particularly interesting. We saw really strong demand coming through from Chinese ETFs for gold. Now, these have been around for many years, have been slow to take off, I'd say. Last couple of years seen a bit of interest, but in April, interest in gold ETFs in China just exploded, along with all other investment channels for buying gold in China in April. And that, I think, was one of the major factors why gold traded up to an all-time high of $3,500 an ounce in that month.
And we also saw it play out when it comes to coin investments, with Asian investors also picking up those coins as well. What's playing out when it comes to the Western investors? Interestingly, European investors seem to be picking up more gold, but that's not really playing out in the US.
Yeah, no, absolutely right. The difference between emerging market bar and coin investors and Western bar and coin investors has been a theme now for the last 2 years.
Yeah.
We're beginning to see an improvement in Europe, but it's still running up levels that are much smaller than it was 2 or 3 years ago. Whereas in the United States, bar and coin demand is still declining. And I think a lot of that is down to the profit taking that we're seeing. When we talk about bar and coin demand, we're talking about net demand. So you can still have strong buying, but if the selling back, the profit taking is strong, that doesn't turn up in the net number. And that profit taking has been a big theme in Europe and continues to be a big theme in the United States as well. So no sign at the moment that, certainly on a net basis, that retail investors, the buyers of bars and coins in the United States, are really showing any urgent demand to add gold to their portfolios. Perhaps less risk off in the United States than there is in some other markets.
And that was going to be my next question, whether the profit taking, the monies we are seeing coming out of that market are probably flowing into other markets, equity markets, or perhaps even other safe havens. One would maybe question the dollar, but the dollar has been at lows for quite some time at the, right now.
Sure, and I think that's right. If you look at this from a very narrow US perspective, you're not particularly bothered about the dollar. You're operating within a country that uses the dollar. Whether it's strong or weak doesn't really affect you very much. And if you look at the strength of the equity market, particularly the recovery that we saw since April, you might think that you don't need a diversifier for your portfolio. All you need to be is invested in the right equity markets. And I think that's a theme that continues to play out in the United States.
Let's zoom in further on the jewelry market, where we did see demand decline. You mentioned that the high prices could be behind that.
Very much so. Pretty much in every market that we look at, we've seen jewelry demand fall, and that decline in jewelry demand, at least in tonnage terms, is a function of the price. The value, the amount of money that people are spending on jewelry continues to go up. So no sign that jewelry is falling out of favor, but as the price goes up, people are buying smaller pieces, maybe lower carats jewelry, rather than the high carat heavy pieces that they might have been buying a few years ago.
And on the back of that, John, it's also been really interesting to see the surge in other precious metals. The likes of platinum and silver have been making gains, with analysts pointing to the high or elevated gold prices. I noticed that demand for platinum jewelry has also been increasing. So is it just, the demand dynamics playing out there because gold prices are at elevated levels?
I think that's very much behind it, certainly in some countries like China. China used to have a booming platinum jewelry market, which has fallen out of favor in the last, I don't know, half a dozen years or so. But now the differential in the price between platinum and gold, which, you know, in most of my life, platinum's been a premium metal to gold. But with it trading now at, I don't know, it got down to as low as about a third of the price of gold. Jewelry manufacturers and retailers are looking at this and thinking this may be the opportunity to rebuild the platinum jewelry market in China. Now, look, platinum is a much smaller market than gold.
Yeah.
I mean, gold jewelry in China is 20 million ounces a year. If you can add 1 million ounces of platinum jewelry, you make an enormous difference to the platinum market. 1 million ounces in gold isn't so much. So I certainly don't think that gold jewelry is being threatened existentially by this trend, but it could really benefit platinum demand.
And John, should we start being concerned about the pullback we've been seeing from central banks? Yes, buying remains elevated, but do you think, you know, central banks are perhaps awaiting a catalyst to spark further buying?
It's difficult to say. I mean, they're very uncommunicative with us when they talk about their intentions. But there's a couple of things I think that might be playing out. If you, as a central bank, wanted to target a certain percentage of your reserves in gold, and the gold price goes up a lot, well, suddenly, you know, the percentage that gold makes up has increased anyway. That might be a factor. The other thing is, as well, is with gold hitting lots of all-time highs this year, that might have been dissuading central banks from getting involved. Nobody wants to pay the high in the market. Perhaps they were waiting for a bit of a correction. Now, to a degree, we've seen that play out over the last couple of months. I'll be really interested to see in the third quarter, when we get those numbers in 2 or 3 months' time, whether this has prompted a bit of an acceleration in central bank purchases. The underlying theme is unchanged, though. We're still seeing very healthy levels of central bank purchases, much more than we saw, say, between 2010 and 2021. They look as if they'll be a bit slower this year than last year, but it's still a very strong and important number.
And moving ahead, where are you pegging prices? Do you expect gold prices to remain elevated? Are we in for more record high moments? Or might we see the prices stabilize? I'm also just thinking on the back of the recovery we've been seeing in equity markets, both in the US. We've also seen a slight recovery coming through in Europe as well.
Sure. I mean, I think broader financial markets seem to be taking the trade deals, the tariff deals that are being struck as we speak at the moment, as generally good news. And I think they've shrugged off any of the negative economic consequences of these high tariffs that will play out on the global economy and on the US consumer particularly. That's fair enough. It's probably been responsible for a bit of the profit taking we've seen in gold as well. But anyone that thinks that we're going to enter a period of calm with stable statements out of the US administration, happy growth around the world, I suspect that might be a little bit too optimistic, and there could be some more volatile times ahead. In the end, the US central bank, the Federal Reserve, will probably cut interest rates towards the end of this year. That generally tends to help gold. The US dollar, which has been declining really since the start of this year, could have further to go. Those two factors alone, never mind the risk and uncertainty that might come out of statements out of the US administration, is likely to see gold supported. Whether we hit new all-time highs, well, I guess it just depends what President Trump says.
All right, let's leave it there, John. Thanks so much for your time and just taking us through that report, telling us about the demand dynamics of gold. Now, that was John Reade, Chief Market Strategist at the World Gold Council.